Welcome back. And as we have been talking about, now that we are entering 2026, the cycle is effectively over. And now we're seeing even more Bitcoin and Ethereum treasury companies capitulating and selling even more of their stash of crypto less than 1 year after they started purchasing. We're also hearing about Polygon going to see an exit from Poly Market after major network issues, as their cryptocurrency Polygon has seen substantial diminishing returns over the past year or so. We have a lot to discuss. The cycle's over, but what do we have to look forward to? Where should we position our portfolios? Because remember, when the market goes down, people make money. When the market goes up, people make money. And so understanding that crypto, AI, Bitcoin may be in for even more declines. This doesn't mean that we're not going to have opportunity to make money on the downside and even on the rallies that we potentially are going to see as the rotation period, as we've talked about, is probably going to last about a year from the top of the market to the bottom of the market. Because as we've been seeing, all the bulls keep saying, buy the dip, buy the dip, buy the dip, and they're prolonging the downtrend and they're prolonging the time frame until we actually hit the bottom of the market. So let's talk about it. We have a lot to discuss, a lot of charts to talk about, a lot of cryptos. We're going to be covering Ethereum, XRP, Polygon, MicroStrategy, Metaplanet, and the Omega Candle nonsense. Let's get right into today's video. Don't forget to give this video a thumbs up. Hit that subscribe button. That way you never miss a new video. We upload every single day of the year. And now to comment on the videos, you have to be subscribed. So make sure you guys are subscribed in advance. Let's get into today's video. The cycle is over. Now we're going to be starting right here with Peter Brandt saying, I'm in the process of analyzing and digging into where the bottom of the market is and when the next top is. He said, I have projected the next bull market high to occur in 2029 in September. And so based on the cyclage, right, or the times that we are in the cycle, right, the top of the market, as we've discussed, if you look at the Bitcoin halving tracker, this has been very accurate, the most accurate chart this cycle, regardless of what people say about the M2 money supply, the people say about the business cycle. People are saying, well, this chart and this chart and this chart and this chart and all this nonsense of charting. The Bitcoin halving chart, which we've been covering all year, has been the most accurate of all of them. And the 550-day, or about 18 months after the halving, is typically, based on the previous cycles, where Bitcoin tops out. And it is true for the 2025 cycle as well. And so the next halving is going to be occurring, I think, in April of 2028 or somewhere around there. And so 18 months after that would be around September of 2029. So Peter Brandt, in my view, is kind of on target. The only issue that we have with these kind of projections is the fact that now, because there's so many more participants in the market, what we're actually seeing is maybe not the pico top of the market, but the macro top is before the 18 months. So we called on this channel the top of the market in July of 2025, even though the pico top was in October. It was only about 10% higher than where we were in the middle of 2025. And so I would imagine that we're probably going to see very similar kind of moves where the actual exit liquidity begins to really ramp up, basically in between the 12 and 18 months after the Bitcoin halving, which would put us from about April of 2029 into September of 2029 for the pico top of the market in the next cycle. And so I would agree with Peter Brandt here. And guys, pay attention, because there's a lot of influencers and YouTubers out here saying 2026 is going to be the year, guys. It's happening. It's coming. It's here. No, it's not. It's not happening in 2026. In fact, even Ali Charts posted on X, and he's been posting, that the next Bitcoin bottom will likely be around October of 2026, which is in line with my analysis and view. This is 1 year after the Bitcoin, the Bitcoin top, from top of the market to bottom of the market. And he's saying that we're going to likely bottom around $37,500. Now, I know there's a lot of people who are going to be in complete denial about that, but in my view, we're already at $80,000 to $90,000 as we're exiting 2025, entering 2026. And the market really hasn't fallen that much, and we are not even near or close to the capitulation phase or where the bulls have turned bearish. When we hit that, number one, you're going to know because we're going to show you on this channel. That way, that's one of the reasons you should definitely become a subscriber. That way, you don't miss these videos because in the previous cycle when FTX collapsed, 2 weeks before FTX collapsed, I told my viewers, consider selling into losses to shore up liquidity. That way you have money in case there is a capitulation event. In November, which we were talking about all year in 2021 or 2022, that we potentially were going to see a lower bottom, and people were like, Cryptoviser, I'm unsubscribing. You don't know what you're talking about. We were 100% correct. And when FTX collapsed and everybody was freaking out, we were buying the market. We bought 15,500, 17,000, 18,000, 19,000, $20,000. And people now who are buying at $90,000 saying they're the most bullish they've ever been. Everybody is selling. The whales are selling. We already sold way higher than these prices. And so we have been right on target. And I believe that Peter Brandt is correct. I believe Ali Charts is correct. And somebody who hasn't been correct, and this is kind of a disappointment, is Samson Mao, who believes that people are now misreading Bitcoin in 2026. He said something that reframes the whole debate. Even at $110,000 Bitcoin, you're barely beating inflation. Around 126,000, Bitcoin isn't euphoric, he says. You're only slightly outperforming inflation, assuming inflation is still running hot. It's trading like a basic inflation hedge, not a speculative blow-off top. Now, the issue with this thesis that Samson Mao has is, number one, he's still repeating the narrative from the last cycle. Inflation. Inflation has come down. I mean, I'm not saying it's gone, and I'm not saying it's not still affecting people in the economy, but inflation is down. And by the way, inflation has always been high. It's always been 2 or more percent. It's not like this just started after the pandemic. This has been going on. And so it doesn't matter what inflation is doing because Bitcoin is not coupled or correlated with inflation. In some ways it is, but that's during the inflationary waves when the inflation is actually going on because of the money printing, as we saw in the previous cycle. That has not been going on this cycle. It's not going on now. Is it going to happen in 2026? Potentially, but we have much lower to go before then. So if we go lower and then we go higher because of inflation and we're back at $90,000, Sam's going to say, you see, it was outrunning inflation. It's like, but we're still not at 150,000. We're still not at 200,000. And listen, I respect Samson, and I believe that he is a very dedicated Bitcoin bull. But at the same time, he's been talking about Omega candles this entire cycle, and we have not really seen Omega candles. Omega candles are one candle, right, on the stock charts of about $10,000 or more in just one move, in 1 hour, in one quick thing, where he's talking about Omega candle going up. He said this in September of last year, right? So about a year and a half ago. Omega is the only certainty, power law, and stock to flow, which was a failed model, are both flawed. But if I had to pick one, I'd go with stock to flow. He also said this in February, right? Almost 2 years ago. Michael Saylor, it's time for Omega, basically saying, buy, let's get the Omega candle. And by the way, the entire cycle, we have not seen an Omega candle. And so just because he's a dedicated bull does not mean that he's going to be right. Just because I've been right in the past on my calls in the market doesn't mean I'm going to be right again. But everything that we are seeing, everything that we understand about the Bitcoin halving cycle shows that the cycle is, yes, it's over. But here's the deal. Now that we're in 2026, we have to really focus on the next catalyst or the next checkpoint for where we need to really understand where the market's going. And I believe it's coming soon. Let's understand a little bit more about that. Now I'm going to be posting, or it's already posted, a video about a macro update. So make sure you guys check that out, hit subscribe, also give this video a thumbs up if you haven't done so already. That way you don't miss these videos. But effectively, now that we're in 2026, I believe that we are going to see major moves in January. I don't know whether it's going to be to the downside or to the upside, but the key date is the end of January. And the reason I say this is if you look at Bitcoin's price charts on previous cycles, ignore where the prices are when I'm recording this video, because it's not about where the price is today. It's about where these target prices are going to be. If we look at 2021 into 2022, what you can see here is we had a massive drawdown until the end of January, and then we had a little bit of a relief rally into basically March. And so if Bitcoin follows this into 2026 and we drop into the end of in the end of January 2026, there is a potential that it will be a good trade to buy in at that low. But we could also maybe see the relief rally now into the end of January 2026. And so if we go higher in January, towards the end of January, that may be a time to bet against the market continuing to go higher. Now, these are just some analysis and theses and things that you could potentially do. I'm not telling you what to do in your portfolio. I don't care what you do in your portfolio. I'm just giving you guys my opinions and my analysis on the market. Almost every single year, at the beginning of the year, you see, this was in 2023. You can see in January, we had a major relief rally to the upside, and then we had a correction into February to the downside, and then a further correction into March. And then if you look at 2023 into 2024, into January, we went higher, and then we basically kind of sideways traded, and then we went majorly higher into March. And so what's going to happen this year, I don't know. I personally believe that January is going to be a down month, but this could create great opportunities for swing trades at the end of January into February or into March, depending on what January does. And I'm going to be keeping you guys up to date all month on this channel, so make sure you guys are subscribed. But this brings us to Polygon and more potential downside ahead. Now, Polymarket is apparently exiting Polygon, and there's major reasons behind this. Polymarket resolves issues after the Polygon network disruption. So the outage stemmed from a Polygon proof-of-stake network problem affecting RPC nodes though the blockchain continued producing blocks. They said the Polygon blockchain was down and affected trades, data providers, deposits, withdrawals, and etc. The event drew focus on the vulnerabilities in external network dependencies, prompting speculation that Polymarket may prioritize its own custom layer 2 for better reliability. Now on this Discord, I believe it is, this is Polymarket's Discord community. Project manager Mustafa said in response to this, many suffered huge losses. When will our own layer 2 launch? Polygon, UMA, Gold Sky, and absolutely all third-party providers cannot maintain the stability required by Polymarket. And the project manager of Polymarket, Mustafa, said very soon after all these outages, it's #1 priority. And so we have seen a massive drawdown in Polygon. And a lot of this, I believe, has to do with what we've been talking about in terms of the banks controlling the markets now. You know, all of these Bitcoin bulls have been exiting Bitcoin and crypto generally. The whales have been selling because Wall Street is now here and they're giving the exit liquidity. They're like, yeah, if you want this money, here's the money, take it and give us your coins. And the whales have been doing that. Retail is in complete denial about this, right? They're like, no, the whales aren't selling. They're definitely not selling, Cryptoviser. You don't know what you're talking about. They're still bullish. It's like, no, they're selling. And so, the issue here is that really all the focus is on Bitcoin, because all of these other blockchains have promised the world and they've delivered very little. They've delivered a lot of promise and a lot of hope and excitement and anticipation and narrative. But in terms of actual growth and stability and security, these blockchains have not done it. And it's not my opinion. This is proof in the pudding. The fact that the banks are creating their own blockchains. The banks are creating their own stable coins. Wall Street is investing in very few layer 2s, very few altcoins, very few blockchains outside of the megas. Even Solana has not really produced anything this cycle besides the Haktua coin and Celebrity coins. And so Polygon, which I have been extremely bullish on, with this idea that Wall Street and the banks would use Ethereum and need layer twos for scalability is just not happening. And I think part of the reason, I mean, there's so many different reasons we can go through, but one of the reasons is these networks, they talk about the same thing over and over and over for years. Ethereum. Well, we're gonna work on the gas fee situation because it's out of control. I mean, they've been literally talking about this for years and they haven't solved the goddamn thing. Why is a bank going to use Ethereum when it takes them 10 years to just even start having a conversation about the gas fees, which go up every single cycle, every single time the price goes higher, right? Everybody's hoping just based on, oh, well, this is the best technology out there, so they're going to use Ethereum. It's like, no, they're actually creating their own blockchains. JP Morgan has their own blockchain. They have their own crypto coin. PayPal has their own blockchain, their own crypto coin. SoFi is creating their own crypto coin. All of them are doing it. They're not using these public networks. And therefore, these layer twos like Polygon, keep in mind, Polygon effectively is fully diluted, has no major inflationary aspects, has no new coins being minted, unlike many of the other chains, and yet the coin's price has gone down precipitously since basically 2025. I mean, you can see this here. December 2024 is at 70 cents, and now we're at 10 cents. This is an 80% reduction in just 1 year in a bull market, in major liquidity entering the markets, while all these major institutions are getting involved in crypto. They're not using Polygon because they're not using layer twos because they're not using Ethereum. And I know a lot of people are going to say, but Cryptoviser, they are using Ethereum. They're using this and this and this, tokenizing this. And guys, they're testing. They're testing on the public networks, getting everybody excited, but they're using their own blockchains. None of these banks, none of these private institutions, and definitely not governments are going to be using public networks that have nodes in other countries outside of their own. It's not happening, period. And we see that. We see that happening. But the bulls are like, no, but Cryptoviser, they are going to use it. They're using it right now. It's like, no, they're not. They are not using it at any scale that is going to drive the prices higher. And in my view, this is why we're seeing massive drawdowns in most of these cryptos. There was a lot of anticipation in the end of 2024 when the president was pro-crypto and he won. And he put in a pro-crypto administration. And the banks are like, fine, you guys want to use blockchain and crypto? We'll do it. But it's going to be on our blockchain. It's going to be using our crypto. It's going to be using stable coins. We're not going to be pumping your bags. That's why the whales are selling, because they know it's over. Now, here's the deal. I could be wrong about this, right? But it just doesn't make sense why a company that is trying to grow and expand is going to stay on a network that has even one issue. It doesn't matter, because if they have their own blockchain, they can blame themselves. But they're using a public blockchain that goes down and has a network outage and creates issues. How do they explain that to investors? How do they explain that to customers? How do they explain that from a trust perspective? They can't. And so they're not going to do it. Period. And it's not just Polygon. It's many other blockchains. But before we go there, because we're going to talk about some more, it is important to really focus and understand what MicroStrategy is doing, because, again, a lot of catalysts are in play at the beginning of 2026. MicroStrategy potentially being removed from the MSCI index. They want their credit rating changed. And I believe Michael Saylor is telling the market we're rotating into the bear market. Okay, because Michael Saylor is basically telling people, don't buy MicroStrategy. We're going to dilute the out of your stock. If you buy the stock, don't buy the stock. Buy Bitcoin and don't sell your Bitcoin. And the MicroStrategy bulls are like, no, guys, this is the best stock in the world. You have to buy MicroStrategy. And it's like, he's telling you not to buy it, and you're buying it. And then you're wondering why the price is going down. It's because he told you the price is going to go down because he's diluting it. So now MicroStrategy has a petition so that they don't get removed from the MSCI, and the MicroStrategy bulls are like, oh yeah, they're not going to be removed because we have a petition out. It's like, no. The petition is telling you that MicroStrategy is acknowledging they're likely going to be removed. And you're like, no, but it's a petition. They're not going to be removed. We're going to support him. We're going to stand behind Michael Saylor and strategy. It's like, he's telling you they're going to be removed from the MSCI index. That's bearish, right? It's unbelievable. But these are the traders that we're trading against. They don't listen. They're not understanding the market in front of them. They're trading the market they want, not the market they have. And so MicroStrategy increased their USD reserves to $2.19 billion. So they sold more stock on the open market to raise more money, and they didn't even buy Bitcoin. And so, as this person says, this is priceless. MicroStrategy bulls are now having to support the idea of fiat reserves. Next, they'll be saying the US dollar is the most pristine collateral. Just amazing. And this is true, right? All the bulls were saying, yeah, fiat sucks. We can't hold dollars because dollars are getting devalued. So we're going to hold the pristine asset, Bitcoin. And now MicroStrategy is holding dollars to pay dividends in dollars. And they're like, oh, yeah, this is amazing. This is amazing. Guys, he's telling you we are heading into a bear market. Because if he believed we were still in a bull market, right? If he believed that we were going to go higher, he would keep buying Bitcoin. But he's telling the market by raising dollars for, number one, he's probably not going to be able to raise as much money, or it's going to be more difficult to raise money in a bear market by selling shares in the open market, right? So he's doing it now. While the liquidity is there, the same reason the whales are selling their coins now. But the bulls, they don't get it. They don't get it. And because they don't get it, we trade against them, right? We know that they are clueless. And so they're giving us the liquidity we need in the market to bet against the market. Like they're literally doing that. And so he's raising money, yes, to pay the dividends, but this tells us one of two things. One, he's not saying this money is only going to be used for dividends. It could be used for anything they want. And so they could use it to buy more Bitcoin at some point in the future when the price drops. And at the same time, he's telling you the price of MicroStrategy is probably going to go down and it's going to be harder to raise money. So all of these things combined should tell you bearish. But the bulls, they're like, oh no, this is very, very bullish. And so the same user said, so they're arguing that they should dilute common stockholders so they can pay off preferreds. And all of this is to improve how their credit is measured by the banks. Because that's what one of the theories is from the bulls, that Michael Saylor is raising cash so that they don't just have Bitcoin in their reserves, because part of the reason MSCI wants to remove them is because they want to say you can only have 50% of your balance sheet in crypto. So that means that, if MicroStrategy has $50 billion in Bitcoin around there, and so if they have $50 billion, that means that they have to have $50 billion in cash as well. Otherwise, they're going to be removed from the index. And so number one, they're not going to be able to raise that much that quick. So they're probably going to be removed from the index. And so if they want to get re-included, that means they're going to continue to dilute, to continue to raise cash, which goes against their thesis, just so they can be included in an index. The bulls don't get it. But that's okay, because there's always going to be winners and there's always going to be losers in these markets. And we want to be the winning side. So we have to understand the market in front of us, not the market we want. Meanwhile, with Metaplanet, Dylan, who is one of the executives over at Metaplanet, I think he's the CEO, but maybe not. Anyway, he said 5 out of 5 proposals have been approved at the Metaplanet shareholder meeting. The first proposal was to approve a shift of capital and capital reserves to capital surplus and increase capacity for preferred share dividends and potential share buybacks. So effectively doing what Michael Saylor is doing with MicroStrategy by raising cash and not just holding Bitcoin. But I thought Bitcoin was the pristine asset. It's the god of the currencies. But they're also going to hold fiat. How does that work? Anyway, number 2, they approved increasing the total number of authorized preferred shares from 277 million to 555 million for each class, A and B. So they're doubling their shares in these preferred shares, doubling, meaning they're going to sell more on the open market, meaning you as a shareholder are going to get diluted. But Cryptoviser, we're going to get dividends. Go for it then. Go get those dividends. Go get those dividends. Anyway, moving right along. The third proposal was to amend Class A preferred shares to a monthly floating rate dividend structure designed to deliver price stability. Number 4 proposal was to amend Class B shares to quarterly dividend structure, add a 10-year 130% issuer call, and include investor put right unless the IPO is in 1 year. And the fifth was to approve the issuance of Class B preferred shares to overseas institutional investors. So again, they have to create more of these things, these preferred shares, to raise more money, because they can't keep doing it the way that they're doing it by selling shares in the open market, because what happened to their stock? Straight down. This is their 6-month chart. In 6 months, it's down 76%. 6 months. I mean, you rarely see this. And we're not even in a bear market. Bitcoin is at all-time highs in October, and this was at all-time lows. How does that work? Anyway, the bulls, this is an example, right? This Twitter influencer said, just bought another 7,420 shares of Strive, which obviously we know this is Vivek Ramaswamy's company that is trying to purchase Semler Scientific, and they're a Bitcoin treasury company. And again, this company also, from 6 months ago till now, 94% drop in the price, 94%, while Bitcoin is at all-time record highs. He said, I dig this entry, and this is why. Tell us. Because, by the way, remember, I showed you guys another tweet from him previously where he was saying that he bought Metaplanet at $3 and it went up to $12. He didn't sell anything, and then it went back to $3, and he's the most bullish he's ever been. It's like, so you did a round trip, and now we're under your buy price, and you're the most bullish you've ever been. It's like, what? This is anti-investing. This is not how you invest. Buy low, sell high. Not buy low, don't do anything high, and then keep buying lower and lower and lower and lower and lower as you're down 90%. That makes no sense. He said, I paid 31% premium to Bitcoin NAV on an enterprise value basis. If I'm buying back this stock for a long time horizon, let's say 5 to 10 years, then I need roughly 9 to 10% annual Bitcoin per diluted share growth over the next 3 years to offset the premium I paid. Anything above that, I outperform spot Bitcoin with multiple expansion. Yada, yada, yada. Look how long this tweet is. Look how long this tweet is. Choo-choo. When you have to justify an investment to this degree, it's not a good investment, right? I mean, people understand Bitcoin. Even though right now, I believe that we're rotating into a bear market and I'm bearish, generally speaking, on it. I understand, like, the idea of buying Bitcoin is very easy. Anti-inflation, it's a valuable asset. It's limited supply. Now it's highly correlated with the stock market, but institutions are buying. It's still very early in its cycle, of currency. Like, there's very easy ways to justify purchasing Bitcoin and understanding that the price is probably going to go up. Is it going to go up as much as it did 3 cycles ago? No, but it's still going to go up in my view. When you have to make all these justifications, it's Bitcoin NAV per share and all this nonsense, it's like, when you're paying above, like, you can go buy a car, and the car is worth $50,000, and you pay $100,000 for it. And you're, I'm going to do a lot of work to it, and it's going to have these new wheels and all of this, and then boom, you get hit, and it's worth zero. It's worth zero. And this could happen with all these stocks. This could happen with all these cryptos, as we just went over with Polygon. There was a lot of promise and a lot of belief that Polygon layer 2s were going to be used and needed to scale Ethereum. But the banks aren't using it. Wall Street isn't using it. They're not even using Ethereum. For the most part, they're using their own blockchains. And that's where the expansion is happening. That's why stablecoins are taking market share. That's why predictions about Bitcoin's price is going down, because stablecoins are taking the market share away from what they thought Bitcoin was going to do. Cathie Wood said this herself. And so if Cathie Wood is saying it, that means her investors believe it. That means that the billionaires understand that. That means most of Wall Street is on that same track. And the banks are doing it. They're creating their own chains. And so we have to trade the market in front of us, not the market that we want. That's the whole idea in 2026. There is a very high likelihood we're going much lower. There's a very high likelihood that we're going to bottom out at the end of 2026. There's going to be a very high likelihood that we're going to have a lot of volatility in between. But we're looking for good opportunities. Doesn't mean that we have to keep buying in the market every single second these prices go down. Strive is down to 82 cents. It's down 90% in 6 months. And the price of Bitcoin is at all-time record highs. And by the way, the treasury companies keep selling. ETHZilla sold $75 million of Ethereum to pay debt as it shifts away from its digital asset treasury strategy. So ETHZilla wrote on X, as part of our redeeming our outstanding senior secured convertible notes, ETHZilla sold 24,000 Ethereum for approximately $75 million. We plan to use all or a significant portion of the proceeds to fund the redemption of these notes. The dashboard below excludes cash on the balance sheet, which will be used to close on the early redemption. In the future, the company believes its value will be driven by revenue and cash flow growth from our real-world asset tokenization business. Bingo, bingo, bingo. You cannot keep pushing this narrative from strategy to Strive to Metaplanet to SharpLink to even Tom Lee's BitMine, right? Saying that they're going to make $1 million a day from Ethereum staking. Well, that's at current prices. But what are they going to do? They're going to keep selling that $1 million of Ethereum from staking rewards. That's going to put sell pressure on the market. Or they're just going to hold the coins and then there's really no cash flow. That's a problem. And so in this bear market, I think a lot of these Bitcoin treasury companies are going to have to create cash flowing businesses. Otherwise, they're going to fail. ETHZilla said, as such, we are discontinuing the MNAV dashboard on our website effective today, but intend to continue providing periodic balance sheet updates. We also continue to report any material changes to our ETH holdings or share count in our SEC filings and social media posts going forward. So they're ending the MNAV because the MNAV is crashed. They're selling the coins to pay the notes, and they're looking to create cash flowing businesses. So this idea that you can just hold coins and it's going to go up forever and you're going to be rich, it's over. And the cycle is over too. And so as this unwinds, the prices are going to continue to unwind. It doesn't mean they're done forever. I mean, Polygon, maybe it's going to come back. There's a possibility of that. But this is a really bad chart to look at. And this, in my view, is a glimpse into what is going on in the rest of crypto. What's happening with Metaplanet, down 90% or 80% in 6 months. Strive, 80, 90% in 6 months. Nakamoto, down 80, 90% in 6 months. MicroStrategy, down over 60% in 6 months. These are glimpses of all of these companies are going to experience the fact that we're still at pretty much all-time record highs, and these companies are down 90% in 6 months. So this is really important to understand, because if you understand this, you're way ahead of the curve. Because most people, like I showed you, even the influencers, are still saying, well, I'm buying now because if I do this and I do this and this happens in the next 3 years and we're going to have massive expansion, ignoring the dilution, ignoring the cyclage, ignoring that Metaplanet is down, Strive is down, even though Bitcoin is up in the same time frame. Just look at this compared to Bitcoin price. Well, actually, let's pull up the IBIT price because IBIT is going to give us a better percentage, right? Maybe it's not. Let's just pull up Bitcoin. We'll compare Bitcoin. I don't know why it's showing like that. 6 month. There we go. So you can see on the 6 month chart, Bitcoin is down 14%, 13.5%, and Strive is down 84%. So which is a better asset to hold, right? And then that brings us to XRP, because Coin Bureau said this: XRP selling pressure. Despite ETF approval, whales with 100,000 to 1 million and 1 million plus XRP wallets, not retail, are driving inflows. Large XRP transfers to Binance signal continued sell pressure. So the inflows into Binance are all institutions, right? Why? Because we're at the end of the cycle. Why? Because they see that Ripple has not integrated XRP into fucking anything. We're at the end of the cycle, and all the promises, okay, going back to all of the other blockchains, all the promises they've created. We're going to lower gas fees. We're going to have 1 million transactions per second. Solana is going to be used by the banks and Wall Street. It's not, right? XRP. Oh my God, Ripple is going to IPO. Ripple's going to do this. Ripple's going to add XRP, and Ripple keeps selling their XRP. And so what are we seeing with the price here at XRP also? Look at the 1 year. We're now down on the year. And the whales are selling. But retail bulls, they ignore all the data. They ignore it. And they just continue to push the thesis they've been pushing for years. I mean, we've been talking about this with other cryptos, right? There's still people talking about Cardano, still people talking about Litecoin, still people talking about Stellar XLM. They haven't even gotten close to their previous all-time highs, and they're still calling for higher numbers than their previous all-time highs now at the end of the cycle. So this is not the way to invest. And in my view, yes, the cycle is clearly over, but there's going to be a lot of opportunity to buy the dips, sell the rips, and also prepare for the bottom of the market, which according to Ali Charts, according to Peter Brandt, is a little bit of a long way off. October 2026, almost a year ahead. And so what do we want to do until then? We want to trade the market. We want to be patient, and we want to have liquidity available so that when we do hit the bottom of the market, whether it's October, whether it's before then or after then, I don't know, but we will know based on the market sentiment, right? When the bulls turn bearish, when we see capitulations, when we see collapses of these companies, that's when we'll know we're at the bottom of the market. But we're not there just yet. So let me know what you guys think down below in the comments. While you're down there, don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. And remember, these are just my opinions and my analysis. You can disagree. You can do whatever you want in your portfolio. I don't care. I don't know. I don't even know who you are. So let me know what you guys think and what you're doing in your portfolio down below in the comments. And I'll see you on the next one. As always, thanks for watching.